well, they call me the chairman of the SHA, but actually I'm just one of you. Because I think we are all purpose-driven parties, but especially purpose-driven people. And I think we're trying to make a difference. And to my opinion, I'm really proud also to see our founding members, our partners, also new members like Cushman, Swiss Life, Savills. It's really great to have this family, because I think we have one thing in common, is that we try to make alignment in the value chain of real estate, and especially on senior housing and healthcare real estate. And also when we look at the attendees, I think it's now the right moment to skip the word alternatives. So let's call it the only main asset class from now on. And it's also, it's really a moment to celebrate, and actually I would like to give some applause to Sylvia, because Sylvia managed to make our first preview version of the SHA annual report. And Sylvia is a small lady, but very powerful. She's on the back, and maybe a warm applause for Sylvia. Yeah, it's really a great performance. And also I would like to share my appreciation also to Real Asset Media. So we have Richard over here, Thomassen over there. I think it's also well, a great performance to have this club MIPIM, because I think we're also outperforming on that side. So you took the step, and it's also a great passion in terms of using, well, let's call it outdated property. But I think it's actually, this is where MIPIM happens. So also Richard, for you, also some applause.
I was very happy just to share my modest house with you.
It's typical English. So I skipped my presentation because I told what it's all about, and it's and I think it's also good to tell that we're becoming the most impactful association, and also that we're trying to make partnerships with fellow associations. Also, for example, the PropTech Foundation from Poland. Because I think the scarcity in personnel is one of the main challenges in the sector. So how can we help with PropTech solutions to make it more, make quality of life even better? And I think that's one of the main drivers of our association. And there's still one thing as an introduction, because the report, it will be distributed also online. So if you share your business card, we will send it digital. There are a few hard copies, but you have to look at Sylvia with your bright smile. But there's also a new initiative, and I'm really pleased also to introduce Frederick Dipp, who is the president of Mosaic Asset Management, really one of the founding members of this association. And Frederick, I think he's really an industry leader, and also as a person. And Frederick called me, and it was about the Orpea scandal. And I think it's also the right moment to step, or actually speak up as an association, and to create transparency, and also that we discuss the scarcity and also the challenges in our sector. And so there was some blaming articles about Orpea, and then Frederick called me like, Ron, maybe from an association perspective, we should step up and maybe work on a governance code. And maybe Frederick, you can give a short introduction on your idea.
Thank you, Ron. Should I stay here, or do I move on? Okay. Yes, the idea, I mean, I think you've all, maybe more in France, but I think it has traveled a little bit, given the importance of Orpea in the sector. Of course, it wasn't very pleasing read, what we have seen. There may be things that are true, things that aren't. The problem is, reputation, of course. As you know, I think for most of you, or a lot of you that have been pitching this sector to investors, one of the counter argument, etc., for entering the sector, despite all its qualities, has been reputational risk, because we're dealing with death, we're dealing with disease, sickness, etc. And some people do not want to be associated with this. And I think our argument has always been, this sector has improved a lot, is putting a lot of things in places, is training people, is putting a governance code, etc. And of course, what we have read, again, not trying to understand whether it's true or not, but it's just shedding a very somber light on the sector. So I think the idea is just simply to say we need more transparency. It's true that there has been a bit of a divide, as you know, as in most cases, between tenants and landlord, and the tenants operators saying, we know what our business, we know what we're doing, and leave us alone, and we're dealing with our own issues, and maybe a bit of a lack of information flowing through to the landlords. And I think maybe it's the time to together, and that's the purpose of the SSHA, really together with the operators, to tell them, let us help you, can you help us to help you, i.e. collectively trying to get more information out and demonstrate that there is a lot of, governance has been put in place among a lot of operators in Europe. I mean, for the time being, just looking at Europe, and trying to show investors, what is the benchmark, what is out there, what does exist among the largest operators in Europe in terms of governance, in terms of making sure that, for instance, there is independence, independent processes, that whenever there is a serious adverse event that happen in any facility, that it is processed through, it's not covered up, it goes through and it is dealt with properly. That at the COMEX level, the remuneration of the COMEX maybe is also dependent on staff and residents' well-being, etc., etc. And so the idea is really to send out a question, to build that question together, with the help of operators and of investors, build that questionnaire, send it out to the top, whatever, 10, 15, 20 operators in each of the European markets, and then, come out with the reports on an anonymized basis. It's not a matter of, pointing fingers or whatever, and telling investors this is, the state of play of governance in this sector, and we can then benchmark maybe that to other sectors, and and also it would help operators to say, well, how do we compare to this, and maybe make some more improvement, and that could be maybe a first step, just to show, well, first that we are doing something about it, that we are trying to get more transparency, that governance is in place, and trying to improve it. And then maybe that's a subject also of discussion among members of the SSHA. Maybe that could be the first step into thinking about a label that could come up. It's always good to have labels. It's also difficult to put in place. We need to talk about certification agencies, etc. There is monitoring. There is a lot of things. So it's maybe a much heavier process, but maybe that could be the first step to get into such a thing, and hopefully, provide a little bit of lighter color to the sector. That's it.
Yeah, excellent. I think it's a great initiative, and it's perfect aligned with our goals of the SHA. Yeah, well, that's my part of the story, because it's not my party, but it's the party of our great expert panel. So I'll hand over the microphone to Richard, and hopefully we have a very insightful... Oh, there's one of the speakers. Yeah, maybe you can also feel free to switch to much more to the right side from your... Yeah. So, Richard, the floor is all yours.
Great, thanks very much. Thank you, Ron. Really interesting topic that we've got here. We've been covering a lot of sectors over the past couple of days here at MIPIM. And what's been interesting has been ESG impact coming into all of those. And obviously this is one of the sectors where there is genuine kind of social impact, and so it's interesting to see this. Let's just start with a quick series of introductions. We won't have time to introduce everybody in the room, but I will start with the good people here. Let's start with you, Nikolai. Just a brief introduction of yourself and the company, and I suppose also useful for everybody in the room to know whether you're focused on senior living or healthcare or both. And let's start with you, and then we'll work our way around.
Okay.
Thank you.
Still working? Yeah. Yeah, my name is Nikolai Schmidt. I'm a member of Swiss Life Asset Managers since 2015, heading the transaction healthcare team, and Swiss Life itself is investing in healthcare since 2006 and can also be considered as one of the pioneers on the German healthcare institutional market. And so far we did invest about 2 billion euros in healthcare, not only in nursing homes, also in assisted living and medical office buildings. And we definitely want to invest more. We got a lot of new equity and appetite of our investors, not only to invest in Germany, but also in Western and Southern Europe. And one of our company slogan is we enable people to live a self-determined life, and that's one focus of our investment strategy. So we only invest in sustainable assets with long-lasting lease contracts, and we also have a glance on the operators, on the social aspect. So we only consider operators which are credit worth and, on the other hand, with good reputation.
Okay, great. Jan-Bastian, quick introduction of yourself and the company.
Yeah, sure. Thank you, Richard. Can you hear me? It's working? Okay, great. My name is Jan-Bastian, and I'm partner at Cushman and Wakefield, located in Frankfurt. So I'm responsible for healthcare advisory services and residential advisory services in Germany, but I'm also leading our EMEA capital markets healthcare team. And I'm very active in that sector since several years. We have advised on more than 4 billion transaction volume, and we are focusing on both. On the one hand, on the nursing asset class, so we are advising on senior living properties, shared living communities, and intensive care properties. But we are also advising on inpatient nursing care facilities such as nursing homes, and also on the medical care side we are quite active, so medical care centers, clinics, and yeah, that's basically it. And I'm very pleased to be part of that panel discussion to bring more, or to try to bring more transparency in the market.
Great, thanks. Stephen.
Yeah, hello there. I'm Stephen Miles from CBRE. I'm responsible for our operational real estate investment across Europe. That covers student housing, healthcare, senior living, and some of the more exotic asset classes. Part of the role of that is to really coordinate our teams across Europe. We have people in each of the major markets now that are focused on healthcare and senior living, and we're bringing that knowledge together, and we're also helping some of our bigger clients travel across those markets and access the asset class.
Great, thanks. Raoul.
Good morning. My name is Raoul Thomassen, the CEO of Aedifica, a listed REIT from Belgium. Aedifica represents a landlord now with assets over 5 billion. We are active in 8 different countries. 85% of our portfolio, I would say, is mostly aimed at residential care for the elderly. There's another 15% with more specialist care and daycare centers. The portfolio is growing. We have a significant pipeline of over 800 million. So we hope to proceed in being able to provide more sustainable solutions for the elderly in future-proof care.
Great, thanks very much. Caryn.
Caryn Donahue, I look after senior living and healthcare for Savills within the UK and Pan-European. We cover all parts of the senior living and healthcare market, from independent living through to care homes, medical offices, hospitals, etc. I started my career in the U.S. senior housing market, so I've seen a bit more of a, I guess, mature market and how it's functioned. And I've brought a lot of those expertise across to the UK and European markets.
Great, thanks. And last but not least, Dietmar.
Hello, my name is Dietmar Zischg. I'm a real estate partner with international law firm CMS, and we are assisting institutional clients in acquiring senior housing and healthcare facilities.
Perfect. It might be interesting, just I think, for the perspective of everybody here in Europe, Caryn, maybe just to pick up on, I suppose, your experiences in the US, how you see that market, what are the comparatives here with Europe, so that we can pick up a little bit of that knowledge of the crossover between those markets.
Yeah, sure. So I guess I think most people know that the US market is quite a bit more mature in terms of the sector itself as you compare it to the UK and Europe. I'd say that's partly because there are probably more scalable operators and opportunities. But I also think it's much more understood from an investor base. So I think it's seen more as kind of a mainstream asset class in the likes of residential, retail, office. And I think the UK and Europe probably still have a long way to go in terms of understanding the sector. I think the other major thing is that we have very kind of specific naming conventions for the different kind of, I guess, subsectors within, say, senior housing. Like there are kind of 5 naming conventions that we use, and I feel like one of the biggest issues I see across Europe is that depending on what geography you're in, people call things quite different names. So I think it's quite hard from a new entrant's perspective to understand what you're talking about all the time, because people use 5 different names to talk about independent living, assisted living, and I think that makes it quite challenging in terms of understanding the subsector of the asset class that we're talking about.
And that's interesting. And Stephen, interested to get from you, is that a challenge that particularly international investors are seeing? And if we're looking at people wanting to build cross-border portfolios, is that one of the challenges, just in terms of understanding the asset class, I suppose?
Yes.
Yeah.
No, look, I think that, simplifying, if you want institutional capital to come into this market and these sectors, you need to make it as easy as possible for them. And I think that, some of those naming conventions is a first step in that, so that they can start to categorize themselves, what they are taking on in terms of risk profile and the challenges. So, look, absolutely, that is one of the first steps we need to take.
Okay, good. I wanted to pick up a little bit on, obviously there was a big focus on senior living healthcare before. That seems to have grown over the last 2 years, particularly with the health crisis as well, and as a focus on that area. I suppose let's start with you, Jan-Bastian. How do you see the market at the moment? I guess how would you see that in terms of activity, deals, trends? What are you seeing?
Well, I think the pandemic situation was kind of an accelerator for the healthcare asset class. Many investors are currently trying to enter the market, not only in Germany, but also in other countries, but with focus on healthcare real estate. Yeah, they are trying to diversify their assets under management with a sustainable footprint. They're trying to invest in properties with long leases, which are really resilient and can be resilient in crisis situations. And that's basically the reason why we see many investors, and I think all of you have the same opinion, are coming from other asset classes such as office or residential and trying to come into that market. Yeah, so we see a significantly increasing demand, new investors coming into the market, a very high competition in Germany. It's really crazy. When we bring something on market, we see in each single transactions new investors trying to get it. So it's quite competitive.
And Raoul, are you seeing a similar thing in terms of more investment focused on, I suppose, more and different investment capital coming in? Are you seeing that from your perspective?
Absolutely. So, for example, Germany, that's exactly what's happening. The new competition is pushing up prices. Difficult at times to compete with that. On the other hand, we can also grow in other ways, right? So we don't have to necessarily compete on every transaction. Especially in our company, we look to develop greenfield in Germany, for example, with our development partners. So in that sense, there is still possibilities to grow.
Okay, good. And in terms of your perspective, Nikolai, what are you seeing? Are you seeing an increasing interest? Is it getting more competitive in the marketplace generally?
Oh yes. So we are in a very, very competitive market. Does it work? Yeah. Especially in Germany because of new investors which came into the market during the crisis the last 2 years ago, and for us we have to deal with increasing prices, and it makes it really, really hard for us to maintain our yield expectations we have for our existing funds. But nevertheless, the asset class itself, it's very, very good and interesting for us because we have stable income, we have strong and bankable operators, long-lasting lease contracts, and that's what our investors still want to have, even if prices are rising and rising.
Okay, good. It'd be interesting, Dietmar, just to get your sense of some of those key trends, but also, the challenges in the market, because obviously there's supply and demand dynamics. There's a whole series of things. What are you seeing?
Well, I think what my fellow speakers have said is true. It depends also a bit on the different countries. Maybe Germany, France, and UK are more developed, as markets. Southern Europe is still lagging a bit behind, and so you could still find a product in Southern Europe, and you could find it also to competitive prices. But the issue is that the product may not be exactly what you're looking for. So that's exactly the challenge. And then you really have to find the time to work with the owner, which often is also the operator, to work out a deal which makes sense for an institutional investor. And I agree, a long-term lease agreement is key. I've never seen a lease agreement with a duration less than 10 years. It's most of the time it's 20 years, even it can go up to 30 years. So it's a sort of let's call it marriage between the landlord and the tenant, and you really have the feeling to get along, because it's very difficult for the landlord to change the operator because of all the regulations which are involved. You have to choose carefully the asset and the operator, and what, of course, I think all investors are doing is a sort of commercial due diligence on the operator. So if they have the credit standing, very important. How much social security contribution they get, also very important, I believe. And the level of services, because of course there will be always, let's say, claims regarding the services they have to face. But of course, you don't want to have an operator who is, exposed with his liability towards medical malpractice or something else. So these are the challenges.
Okay, that's interesting. Let's drill down a little bit also into that demand side of I suppose, what people are looking for. From your perspective, Raoul, what are you seeing in terms of the demand? What's the expectations? What needs to be delivered into the market?
Yeah, the demand side, it depends a bit by country. You see also that in some countries, in some cultures, there is already much more a trend toward seniors going into independent living before they at some point might need assistance. In other countries, that's still lagging behind. I was just speaking to a colleague from Sweden where, for example, that is something that perhaps will be accelerating in the future, but today is not so apparent in the market. So you'll have to judge it market by market. In some countries, also campuses are coming up, a combination of assisted living and independent living facility on one side. Not always with the same operator, but if that's possible, that could create an economy of scale, obviously.
Okay, good. And it would be interesting, I think, Stephen, maybe coming to you, just in terms of, because you're looking across that sort of operator side, how does this sector compare with some of the others in terms of, I suppose, from your perspective, investability and attraction in terms of capital flows? Are you seeing increased capital coming?
I think there's no lack of demand for investors trying to get into this space. I think the challenge is that at the sort of the end of life side of things, you are dealing with a vulnerable part of society, and there will always be challenges around that, and from time to time there will be events like we've seen recently. I think that in terms of where the capital feels most comfortable, it's that independent living piece, and I think we need to expand that part of the market. I think that if we want to get these large volumes of institutional capital coming in to senior living and healthcare, I think that we can, there's a lot of space to expand that independent living, providing the right types of accommodation so that people can stay independent for longer rather than being in situ housing that may just not be appropriate as they slowly I guess have reduced mobility or whatever. So I think there's huge scope for institutional capital to come in, and we start expanding that piece of the marketplace.
Okay, go ahead if you wanted to, Caryn. Yeah. We'll set a rule that you don't need to ask. You can just do it.
I was going to add to that I think what I would say on that point is that it's a little bit trickier. I think that one of the bigger barriers is the fact that there aren't that many institutionalized operators, which is again where we've seen in the US, I think a lot of the operators are much more institutional, whereas across Europe you're seeing a lot more like mom and pop or family run type owners and operators. So as much as you want to kind of expand out on that institutional investment, I think the biggest barrier is getting institutionalized operators to actually be able to do that. I think that that's probably the biggest challenge across the continent that I see, at least.
Okay, and Nikolai, do you get a sense that that's beginning to change? I mean, it's interesting that whether or not operators are we'll actually see a growth in terms of the operators and less of the sort of much smaller kind of granular operators.
Well, I think we do see right now a shift from nursing homes to assisted living, because assisted living because of two main reasons. One reason is that it's less regulatory in terms of construction, in terms of fire protection, etc. And on the other hand, it's less staff intensive. So we do have a really, really big problem with getting appropriate staff for nursing homes. So in assisted living, we do have less staff, which is needed to care the people in the facilities. And I think we will have more and more activities in assisted living, especially in Germany. I do see that development in Germany. And on the other hand, it would be a relief for nursing homes, because not everyone who is in care, who is in need of care, does have to go into a nursing home immediately.
Okay, interesting.
Maybe,
do you want to pick that up?
yeah, maybe just to add on the operational side you just mentioned, we see that developments in the European markets. We see M&A processes and transactions coming over. We see more developing and emerging markets towards to a professional investment environment. For example, the largest French operators, they are nearly covering all European countries, and that's basically what we see, and that makes that investment class definitely interesting also for institutionals who are looking to invest into core companies and core lease agreements. Yeah, that's basically the fact. Yeah.
Yeah, maybe a question from my side, also on especially the operational side, also to Caryn, from your US experience. Where is the opportunity to tackle the scarcity in personnel, to your opinion?
In terms of staffing it?
Yes, yeah, it's a simple question, but I'm really curious.
I mean, I think staffing continues to be a challenge just across the sector. I mean, I don't know that I have the answer in terms of how to tackle it necessarily, but I think what we've seen in more institutionalized operators, again in the US, is giving staff some sort of, I guess, upward mobility or some ability to actually expand on their career outside of just being in a carer or maybe kitchen staff or whatever it might be, but giving them actually kind of a career projection and training within that to actually make them feel like they're part of a bigger company, that they can grow with that company over time. I think that gives them a lot more like ownership to be a part of that group rather than just being a hourly employee that would maybe rather work elsewhere. And I think that's quite an interesting point on the kind of institutional operator side.
And also, do you see some prop tech innovations on the perspective like wearables, robotics, AR?
I think that's also very much expanding at the moment, because I think you're trying to be less invasive, especially in like an independent living environment. So being able to, some higher end providers or maybe have like motion detectors within the rooms to make sure that people are apartments, to make sure people are up and moving rather than having to knock on the door and check on them. You have the kind of wearables in case somebody falls or something like that. But we're seeing those a lot more within independent living or even assisted living communities to make it less invasive and make people feel like they are still being looked after, but they're a bit more independent in that scenario.
Good. I wanted to just check in terms of, I mean, so for example, we've been doing sessions around logistics, residential, all of which have really constrained supply. So what's the situation here in terms of, I suppose, the demand for these kinds of assets, both in senior living and in healthcare, and the actual supply? Is there a really substantial gap? What does that mean, and how do we solve that? So does anybody want to start on what the gap actually is, or how much of a gap we're seeing between supply and demand? Because obviously, particularly in Europe, we've got a growing demographic trend towards aging, obviously.
I would say there is a definite gap backed on this aging population. If we look at current equipment rates in the countries, one might argue they need to go up, but even if we keep them at this level, just the population share that will be aging will drive up and will require in some countries to double the amount of beds by 2050. So that's a huge challenge for the sector as a whole.
And is this all going to be new build? I mean, what's the situation? Because obviously there are facilities that were developed some time ago, but are they suitable for the demand now? What's anybody's view on that?
I think based on the development we saw in pricing for healthcare real estate, healthcare, for example, especially assisted living properties, have become more interesting also for developers. Just to jump into that asset class and to build senior living facilities. And that's basically the reason why we have a very active development environment, especially in Germany right now, as there are many institutional investors looking for it. And that's really important to make the gap smaller in the next and in the upcoming years as the demand is increasing based on the demographic change, of course.
And it would be interesting to do, we also launched a magazine around impact, ESG, purpose-driven investment, and this seems a sector that fits very well with that, particularly when you're looking at senior care, healthcare, but also specialised dementia care and those kinds of things. Is that an area that, do you think that's an area where increasingly institutional capital, and maybe it's interesting for you, Stephen, there's the institutional capital are looking more at that sort of impact ESG side, and that may drive also more capital into this sector?
Yeah, I think from the capital side, ESG has up until now been more focused on the E, the environmental and sort of greening of the buildings and the energy efficiency, etc. And actually, it does differ as well, depending which part of the world you come from. I think the US capital has been much more focused on the S and less so on the E, and European capital more on the E and less on the S. So I think we're seeing all that coming together now, and people realizing they have to have a whole piece visibility. So look, there isn't a discussion today with an investor that doesn't involve some kind of ESG commentary and requirements. So it's an absolute given today that you need to have a strategy around that.
And I suppose from your point of view, Raoul, as well, how are you building that into what you're doing? Because obviously, Steve's absolutely right that there's a huge amount of demand from that, and especially in the listed area as well.
Yeah. For us, future-proofing our portfolio is a key focus area for us as a company. Future-proofing in terms of the care and the needs of residents, which are changing, but especially also in the energy performance of the buildings. Being active in so many different geographies, we do notice that regulation takes time to catch up, and in some cases we are just not going to be able to wait for that if we want to future-proof the portfolio in terms of energy performance. I can't wait for the German or the UK government to come with new regulation in 3 years, because I'm building for 30 years or longer. So we have to anticipate that. So for the countries where we are active, we have a development framework which allows us already up front, when we discuss with developers and operators, to say, okay, these are some minimum criteria that we need to build in to make sure that our portfolio will also be able to comply with the Paris Accord by 2050. Yeah.
I just want to add on that. I think actually we are seeing today that the investors, but also the lenders, are driving that environmental piece far more so than regulation at government level.
But always the bigger ones. It's on the bigger operators which are able to give the consumption data and the reportings, etc. Our experience is that, especially during our asset management, sometimes it's a bit difficult to improve our ESG position, because it's not so easy to agree on additional green lease clauses or delivering consumption data, etc. So when we have project developments with new operators and new lease contracts, okay, we can agree on that and negotiate. But existing, in terms of existing contracts, it's kind of difficult sometimes.
Okay, good. And you want to pick that up as well?
Yeah, I just wanted to add, it's also my experience that other sectors are focusing on E. This one is actually focused on the S, and I mean, if you invest in care homes, nursing homes, and healthcare hospitals, then it has a social impact. No? So it is the S in ESG. And so we do actually assist institutional investors who have set up, dedicated fund for healthcare and care homes, and it's ESG because of the social impact. But of course, then you have to work on the E, because existing stock is normally not compliant with the E. So how do we do that? Normally, the investor gives some capex contribution to the landlord, to the tenant, sorry. And the tenant improves the building, and you increase simply the rent. And the benefit of the tenant is that those capex installments normally, in the best case, drive down the service charges. So in the best case, it's win-win. It's not always win-win, but in the best case, it could be win-win.
And maybe an additional question also on the social aspect. We do see that we're trying to solve also aging demographics within the communities. And quite recently, Caryn, you published a great paper on the senior living on UK, where you highlighted the integrated communities for retirement. Maybe you can share your views on this type of concepts, and also how it tackles loneliness, how it stimulates independent living, etc.
Yeah, sure. I think that we've seen, especially in the UK market through the pandemic, that there's actually been somewhat of an uptick in demand. I think a lot of people were quite worried about post-COVID what that would mean for the sector. People were worried about moving into communal living settings, but especially on the independent living side, I think most of the operators that we've spoken to have said that there's actually been an increased demand for that exact reason, the loneliness factor. I think most people are kind of future-proofing the fact they don't want to be in another situation where they might be alone for, we had quite a long lockdown in the UK, but 6 months at a time, where they need a lot of help and support. So I think it's actually helped demand on that basis. But I also think that what I would say on the more, we're calling them the UK integrated retirement communities, another naming convention as I mentioned, but I think the other kind of big driver of that is that the more recent communities are much more aspirational, and there's lots of amenities, there are lots of services on site, there are hospitality services, but also care services. So they're looking a little bit more like boutique hotels rather than institutional hospitals, maybe for somebody who is still quite independent and wants to feel like they're still independent but can still have the support when they need it.
Okay, good. It would be interesting. It's interesting to see that development there in the market, I think, as well. It might be good just for those who are interested in some of the different regions, different geographies, just to pick up on what our sense is across Europe of some of the key markets. So maybe Nikolai, let's start with you. In some of the key markets, I suppose, where are you seeing the opportunities? Where are investors looking? And then we'll pick up on the markets where you're operating in, just to see where you're seeing those opportunities as well. Nikolai, let's start with you.
So far, we do concentrate on the biggest market like Germany and France, because there are the most attractive opportunities, sometimes portfolio deals, etc. But in terms of portfolio diversification, in terms of different countries we have to invest in, we are more and more focusing on Southern Europe, such as Spain and Italy. And yeah, that's also why we joined the SHHA, to get more and more information about that, about the markets. And yeah, that's the market that we see the future, because so far it is not so much invested in our company.
Okay, that's interesting. And is that also based around expected demand specifically, or in those particular countries? Is that, I mean, what were the drivers for the investment strategy there?
One thing is that we want to expand due to diversification reasons, and the other thing is that we see a potential because of a shift in the southern states from family care to professional care in facilities.
Okay, good. Steve, maybe coming to you just in terms of the geographies, what you're seeing, where the investor interest is.
Yeah, look, I think the investor interest starts in France and Germany, the big markets. But again, it's looking at expanding into other markets. There is a culture issue. You know, people do tend to live at home longer in certain countries. But I think, look, all markets are undersupplied generally. So I think that, you know, if you can find the right product, develop it with a reliable partner, I think most of the investors are happy to look generally across the region.
Okay, good. And Raoul, what's your...
Yeah, first of all, as Aedifica, if you look, in the last 18 months, we entered into 2 new geographies. One of them was Spain, very much for the same reasons that Nikolai mentioned. So our analysis there is matching. The other one was, for example, Ireland, where in the last more or less year, we have been able to grow, also based on the consolidation of the operator landscape. So in that time frame, now we have a portfolio, once completed, of over 200 million. Just yesterday we announced another transaction there. So there are opportunities, and as you are integrated with operators and developers, usually once you have a footprint, you can also benefit from that network and that expertise to then expand on it.
Maybe just to add on that one, that's basically exactly what we see. Yeah, Germany and France are the major markets, the largest markets. And when we are talking about new investors try to enter those most liquid markets, yeah, and that's the reason why they are looking to invest into those markets. But the established ones are trying to diversify their portfolios all over Europe. Yeah, there's no limit on expansion.
Okay, good. And I suppose, Raoul, from your position, is that the start of expanding, i.e. you're looking to really develop a kind of pan-European strategy, and that you'll then look at those markets and move into them where you see the opportunities?
Yes, well, I would say already being active in 8 countries, we are quite pan-European already there. We are hoping to grow in each of these markets where we are today. But equally, we would be looking at new opportunities. But again, that would mean that we would, in our analysis, indeed see that we can actually build a sizable portfolio. We wouldn't enter into a new country just because we can buy 2 care homes. That doesn't work for us. That's not enough scale. No.
So for you, one of the elements is really scale there. That it's to be in. If you're going to move into a new country, you need to have scale and the opportunity to build scale in that country.
Yeah, the opportunity to build scale. I mean, obviously you have to start somewhere. But when we went into Ireland, for example, it was clear that we saw opportunities in the market, and we have been able to demonstrate that the growth is there, even Ireland not being a huge geography.
Yeah, and what about Poland? Because I think when you're following the aging demographics, there's no Poland in your pitch.
Not
It's
yet.
an open question.
Yeah.
Not yet, of course. And also, why are boundaries important? Country boundaries.
I am Fulvia. I come from Italy. I represent Fabbrica Immobiliare SGR. We are asset and fund managers active in alternative. Now I don't consider them alternative anymore. Residential, PBSA, and also senior. When I say senior, I really agree with you that we have to clarify what we mean. At the moment, we convinced 3 big Italian pension funds to invest 5 million euros in independent senior housing for 65 plus seniors. We're in the stage where we are considering it's a brand new market in Italy, and the challenge is to create the asset class. We are in the stage of speaking with already existing partners in Italy, active in the sector, international groups that you all know that are already working on care homes and are switching to independent housing. But also we look for investors, developers, and operators that wish to enter to Italy. So I will tell you this because please come to me if you want to join forces. I have many things I would like to share. First of all, at the moment we are discussing a lot in the format because it's simple to say, let's do senior housing in Italy. Not at all. For cultural reasons, for demographic reasons, actually are very in favor of us. We are the oldest country after Japan, and we have plenty of demographic to serve. The problem for us is identifying the right product and identify the right services to propose. What I notice, there is a big confusion. They think, oh, they are vulnerable. What do you mean? 65 plus. They are you in 10 years. Are you going to be vulnerable? I hope not. So sometimes we think of something. So sometimes we start to think about independent living, and then we realize, what are you talking about? This is care homes. It's not, no? So it's difficult to do the opposite. Not add services, but take off. Less is more, to avoid that the cost will completely give no sense in terms of, returns for investors. Another thing we are discussing, I would be very happy to hear your thoughts, is the intergenerational plus. Whenever we say senior, I already start saying, come on, no. Because I spoke with many experts about this, also Americans, and they say, seniors don't want to enter homes where you say, this is for senior, because they say, I'm not senior, even though they are 70. So they want to see something which is very cool, very sexy, and so even though it's thought for them, it should not be said. This is a marketing stuff that we have to we have to take in consideration. That's why sometimes we are discussing, let's put in the senior product something which is not senior. So let's do like, young professionals. So it becomes so complicated because then, so it's like offering a universal product because someone said, if it's good for seniors, it's good for everybody. But you cannot market it as senior because nobody, unless it's so cool, it's like for luxury guys. They want, they push a button and 3 people will arrive in the house. This is not what we want to do because for the ESG, we want to give also affordable stuff, okay? So I would be very happy after this conversation. Also because at the MIPIM platform, when I looked for, senior, when I search for people to meet, there is not a senior flag at the moment. So for me, it was like trying to find, I don't know how to say in English, a needle in the... Thank you. So let's discuss this because otherwise, the intergenerational thing is some of my competitors in Italy, they say, I will not do senior, I will do multifamily. Why should I do that?
Well, if you're looking for senior, I'm heading in that direction, so that's good.
So I wanted just to give you some, inputs and whenever.
No, that's really interesting, and I think the affordability part is also a really interesting. There was a question from here as well, wasn't there, Andrew? Yeah.
Yeah, I wanted to pick up. It's Andrew Raoul from Emerging Europe, so covering 23 countries of Central and Eastern Europe, and I wanted to pick up on Ron's question actually. And I would be interested in hearing your views on the obstacles that prevent you from entering countries like Poland, like Romania, anything, in the sort of eastern part of the continent. Thank you.
Maybe an open question, so not an investor-specific question.
Yeah, it's an open question.
Right.
Well, from our view, we would be looking at these markets in the same way as we are looking at other markets, but then judging the criteria. So how professional is the operator landscape? Is it consolidating? Do we have only a very fragmented market with local players only? The funding of care for residents. So it becomes very important if we want to sign a 30-year lease with an operator that we can rely, there's no guarantee, but we can rely that the government will not make a dramatic change in the social parameters for care, because that could really hurt the operator even being able to provide that care and pay the rent. So we need, in that sense, the stability in the policies and the government, which is one factor that from time to time makes us shy away from certain markets or makes us reconsider. And we will see a shift. We have moved from some of the older core countries in Western Europe already a bit outward, and now to Spain a bit southward. Will that expansion continue? Will mostly depend on those factors.
So we do have a very simple reason why we did step into these markets, Poland, Slovakia, etc. so far, because we are not experienced enough. We don't have the local expertise in these markets. So it's really possible that we will expand in these markets in the upcoming years, but so far we are not experienced enough, and we have to talk to our institutional investors if they are able to invest in these countries as well.
So does it mean that you would need some research or some staff?
Yes. Research, and the other thing is definitely the staffing and the care, the refinancing of care. We don't know right now, and that's really
basically the lack of knowledge.
So far, yeah. So far, yes.
Okay. All right.
But I think in general, this is also based on the lack of product, right? Because the knowledge comes when there's product. Investors are starting to really treat the market, to come into the market and to research themselves. We saw it also from other investors who tried to enter several markets. Yeah, there was an investment target they are looking at, and then they started to really evaluate the markets.
Great. And in terms of the affordability side, which I think is interesting, because obviously you've got different levels of service and affordability. And interestingly, certainly this is the case in the UK, I don't know if it is elsewhere, that you're beginning to see people moving specifically also in dementia care to Asia, for example, because it's more affordable for them to have their relative in Asia living a comfortable life there than it is to be in the UK. So that's sort of travelling. So there is an affordability issue somewhere, and people dealing with that in different ways. I don't know, what's your perspective, Caryn, on that maybe in terms of those different service levels? Did that come in your UK report anyway?
Yeah, I mean, I think the affordability component is always difficult. The kind of getting into the middle market type product is not easy. I don't even think most of the operators have cracked that in the US yet either. I think some operators across the continent are being, I guess, more so charging rent and then giving people the opportunity to add a la carte services as and when they need them, rather than having a kind of all-in package that may be completely unaffordable to many people. So I think it's looking at, I guess, making it a little bit more affordable from that perspective, rather than having these kind of full service offerings where maybe people don't need 3 hours of care a week or whatever the case may be. They might want to add that on at a later date, but I don't think anyone's necessarily cracked the affordability side. I think in the UK, a lot of people are using the rental model as a way to do that, because historically the market is operated under a for sale market. So most people have to put up hundreds of thousands of pounds in order to actually enter a community. So people are using rental as a way to maybe attract more people in a more affordable way.
Okay, good. I want to leave lots of room for everybody to be able to meet, discuss also in a private kind of setting, the panelists, and there'll be teas and coffees next door in a minute. So just a very quick last round to everybody, which is, if we're meeting next year at MIPIM, what will, I suppose, what will have been the progress that we'll have made, I guess? What are the things that you're seeing as either the biggest opportunities or things that we may have solved by then? It's a 10 seconds each.
10 seconds.
Yeah, exactly.
10 seconds.
10
okay.
seconds. You've already used yours. No, you haven't. No, go on.
Okay. Just let's keep it short. I think the prices will for everything in social in senior housing and healthcare will rise and rise. I don't think that we will have a stagnation or something like that. And I think the development in the upcoming years stands and falls with the availability of qualified personnel in this sector.
Great, thanks. Jan-Bastian.
I think so too, yeah. I think that there will be many operators trying to cover all over Europe and to develop kind of a platform. I think we will see many kind of pension funds and insurance companies who are trying to really strengthen their investment footprint in that asset class. And I think we will see hopefully also other panel members here in front of each other and discussing together.
Great. Stephen.
Yeah, look, I mean, I think that we'll be seeing more and more capital coming in. I think we've got to get developers starting to develop product, and look, senior living competes with the multifamily market in all the countries really. So pricing there is really strong, but I think we just need to start getting if the developers see the institutional capital coming in behind, they'll start developing the product and we'll start expanding this market.
Raoul.
So in terms of the number one issue, I agree with Nikolai. Within Aedifica, we did an operator survey, and in every country, the number one problem is the availability of qualified staff. If I would say, what would you like to improve or have solved by next year to get aligned with more operators than today on what it takes to future-proof that real estate? I think that's a very big step that we still need to take. Some of the institutional operators are already quite far in that, and with others, we have to continue that conversation.
Okay, great.
Yeah.
Caryn.
To add to probably most of the things people have said, I would say that seeing operators, especially more mature operators, say in France or Germany, crossing borders, bringing some of their expertise to some of the other markets like Italy, Spain, where there may be less expertise on the operational side. And I hope to see more of that happening, especially as we see a lot more consolidation going on across the continent.
Great. Dietmar.
Yeah, actually nothing to add, yeah.
Yeah, we already like you, Dietmar. That's great.
Yeah, operators used to be key, of course, for institutional investors to deal with umpteens operators across the continent. It's simply impossible. So, I mean, the less interface you have with, the better. So, yeah, I agree. Consolidation of the operators is key.
And what about you, Richard?
Well, aside from hoping that everybody in the room by the time we're next year is also a member of the Senior Housing and Healthcare Association, but that's a friend. Yeah, that's a given. No, I mean I'm very keen to continue publicising what's happening in the industry, and I think it's really interesting that the discussions there about Italy and CE. That actually it's about learning more about those markets, finding the research that is being done and being able to bring that together so that it does create more transparency, it does create more confidence for investors to invest, for operators to move into it, and for and in general for the market to grow. And I do think not just because I'll be hitting that demographic at some point, but I do think it's a genuinely positive part of the industry to be able to create better living for people as they're moving into senior living or have health issues like dementia or other things. That the more actually this sector can grow, the better it is for everybody. That's my kind of thought on it. And on that, well, do you have one, Ron, that you want to share? Or do you just go and have coffee?
Hopefully we care for each other again and we're not in war. And therefore I would like to actually finalize with applause for this expert panel. So I think great insights.